What's going on, everybody? Jason Soroy, Denver Realtor here. Hey, we're here to chat with you today about interest rates. The environment that we are in right now is incredibly powerful for both buyers and sellers. And as always, I'm committed to bringing you the strategies and the facts to make informed, smart decisions. So let's dive straight in and start talking about what the heck is going on with rates and why it matters. So real quick, I just want to be clear, I am not a mortgage loan officer. I have lender partners on my team that I'm working with regularly. I get that information from folks that I'm following on the national and the local scale. So what you're about to hear today is a high level impact of how do rates impact both buyers and sellers. So let's dive straight in. Number one, we'll start out with where are rates today. It's almost the end of October 2020, and my lender partners are still locking folks in the high twos. We've been here for a couple of months. Now that's all good, but relative to what? I'm glad you asked. Let's pull up this historic chart. Over the last 10 years, this is where the rates have fallen. You've got three colors here. Orange up top is the adjustable rate mortgage. Blue in the middle is the fixed rate mortgage, 30 years. Green in the bottom is the 15-year fixed rate. So let's talk about the 30-year fixed blue line. You'll notice that in 2012, November was the previous all-time low. We thought everything was great. If you follow that black line all the way across, you'll notice that we are now far below that. So this is massive news. This is huge impact for both buyers and sellers. Let's talk about buyers first. So what does that buy you today? Let's answer that question by looking back through a lens of the last 3 years. So we're gonna buy the same house with the interest rate that you could have locked in 2018, 2019, and 2020 today. So the house we're gonna buy has a $750,000 price tag. You're putting 20% down, and the rate is gonna be the only thing that adjusts. Now, before you turn this video off, I know that some of you are shopping below $750,000, some of you are shopping above. Let's just take this as an example here so that we can look at the spread between what this interest rate really means. 2018, you had $750,000 house, you're putting 20% down, you got an interest rate of 4.9. Your approximate PITI, principal, interest, taxes, and insurance, is going to break down to $4,184. Cool, that's our baseline. Fast forward 1 year, the rate has now dipped to 3.68. Your mortgage on that exact same house with the same terms, 20% down, $750,000. Your PITI is now $3,755. Okay, we're ratcheting down. Fast forward to 2020, the year of the coronavirus, here we go. It is estimated $3,469 for that same house. That's a huge spread. $715 per month is saved when you compare this year to 2018. This is significant money. So buyers are wondering, if I wait just a little bit longer, maybe I'll see the rate get a little bit lower and I'll be able to afford that next tier price point. It's possible. For sellers, they could be saying, hey, I'm not gonna refinance until I hit that rock bottom low. But the only problem with that is, how do you know that you've hit the rock bottom low? Well, you know you've hit the bottom when it bounces and you start to have the increase in interest rates. It's like, oh, dang, I missed the boat and now I have to buy at this higher rate or refinance at this higher rate. Now, another thing here, I don't want this to sound self-serving. My goal is to present you with information so you can make an informed decision. Let's just leave it at that. Cool. So back to the question, can I wait longer to get a better deal? And the answer to that is maybe. How much lower could rates go? I don't know the answer to that, but I do rely on my lender partners to make informed decisions based on key leading indicators that can be a precursor to rates hiking back up. And the things that these lender partners of mine are looking at include inflation, the stimulus package during this corona economy that we're dealing with today, the rate at which the Fed is buying back mortgage-backed securities. Are they bullish or bearish on that? And then of course, we got to keep in mind, we've got to get a vaccine for COVID-19. So there's so many unknowns, but it's important to remember we are at a very low rate. So how much lower could it go? And how much longer are you willing to wait before you pull the trigger, taking advantage of the rate where we are today? So how are sellers affected by this low interest rate environment? A couple of ways. Number one, buyer pool size. If you have a commodity that is in high demand and low supply, that means you are in the position of leverage. Congratulations. So when rates go down, buying power goes up. That means that buyers have a ton of extra money available to them to buy the house than they ever have before because of this historic low, which is also the reason why in Metro Denver, we have less than one home available to every active buyer looking in this area, which explains the aggressive and rapid neck-breaking speed of bidding wars. You need to be on your game. You need to have a realtor who knows what they're doing, who knows the contracts, who knows how to negotiate, and is personable. The other way sellers are affected is through equity position. As sellers refinance, and more sellers refinance at these lower rates, this is a good thing because more and more homeowners have more equity in their home. This is the opposite scenario that we saw in 2008, where homeowners were over-leveraged and they were underwater on their homes. So to wrap it all up, the mortgage rate environment that we are in today is incredibly powerful for buyers and sellers. And as always, I'm committed to bringing you the facts and the strategies to make sure you're on the winning side of that transaction when you're working with me. In fact, if you have any questions about that, text me 303-888-3450. That's my cell phone. Stay healthy and be well. Thanks for tuning in.